March, we did see a 0.3% increase in property prices nationally, but that's continuing to slow. And over the last 12 months, we've seen prices rise by 18%, which is clearly still very strong growth. But that has been slowing since about September, October of last year, that annual rate of growth. And the areas where we're really starting to see that slowdown bite is places like Sydney and Melbourne, also Darwin as well, and even other markets where we haven't seen the magnitude of slowdown as large. We're still seeing the monthly rate of growth starting to slow and having slowed over the last 4 or 5 months. So there's clear signs that some of the heat has come out of the market. In terms of demand for property, I mean, we can see auction clearance rates every week. They've not been as strong as they were. We're seeing demand on our measure actually lower than it was a year ago in both Sydney and Melbourne. Properties are still selling quite quickly, but we have seen a slight increase in how long properties are sitting on our site. And really the big reason why this is all happening is certainly we're getting those signals that interest rates are going to be increasing later this year, whether it's June or whether it's later, they're coming. But the other big one is that there's so much more stock on the market. Since the end of lockdowns last year, we've seen a massive surge in the number of new properties listed for sale, and that just gives people a bit more choice and really takes that desperation out of the housing market. If we go back 12 months, there was nothing coming onto the market. There were a lot of people wanting to buy, and people were just lobbing in silly offers to secure properties. Now there's a little bit less or fewer buyers around, and there's more stock around, so people don't have that same level of desperation. And I think vendors in particular haven't necessarily started to adjust to those change conditions, and some of their price expectations are a bit out of whack with where the market's at the moment.